Welcome back. Ahead of the 2019 general elections, developments within the political space have called for investor concerns as financial assets investing decisions keep aligning with the brunt of fickle politics. And from the yield curve volatility to debt and equity raising opportunities amid rising political tensions, and even to equity and fixed income asset investing, political risk climate appears to be the focal point of all investment decisions at this time. Joining me now to put context to this discourse is the Managing Director, Afrinvest Securities Limited, Ayodeji Ebo, and of course, my colleague at the Stock Exchange will be joining us in this conversation. Thank you very much for joining us, Ayodeji.
Thanks for having me.
So tell me, what sound bites are the various markets producing from the recent wave of political defections in the country? Is there any cause for concern for investors?
Yeah, we've seen a lot of, in terms of drama within the political space. But what we've also observed is that for most foreign investors, especially for those that have been investing in Nigeria beyond in the past, we've noticed that for most of these things that we see really don't trickle down into destabilizing in terms of the economic indicators. So when you still look at in terms of our economic indicators, they still remain very strong. The fundamentals still remain very strong. However, for most of the foreign investors, reducing the exposure is typically what we see as we approach general election. Though in terms of looking at how things have panned out in this election, we've seen in terms of the defection, in terms of the standoff that we saw yesterday at the National Assembly. But we feel the downtrend we've seen in the market is just some foreign investors still trying to reduce their position. And we've also seen renewed interest in those stocks that have strong fundamentals, likes of GT Bank, Zenith Bank, seeing investors taking opportunity of those stocks at very cheap valuation compared to where it was in last 2 months or 3 months.
All right. So do you foresee any policy uncertainties around the economy that may significantly, tense the market ahead of the general elections?
No, we don't foresee any significant policy instability. The budget would have affected in terms of how to grow the economy, implementation of the ERGP. We've seen that has been passed, and we feel that in terms of acceleration of that budget, we know part of what is also still hanging in terms of signing off on how to finance the budget. But we feel this may just slow down in terms of the pace at which the economy would have grown if everything has been in place. But we don't see any major setback because also the incumbent will also be trying to also make a case for an re-election. So we'll try everything possible to ensure that in terms of policy stability, in terms of implementation of some of their plans to show very tangible results when campaigning for the election.
Okay, I'm sure Bosun will be itching to chip in some words in this conversation. Yeah, Bosun, Ayodeji is here with me. Any words for him?
Yes. Okay, it's nice to join you guys from here at the Stock Exchange, Nigerian Stock Exchange. But again, Ayodeji, if you look at the fixed income market yesterday, there was a bit of a sell-off by foreign investors on 2027 and 2028 Nigerian Naira paper, and you saw a sell-off also in the Treasury bills market. So if investors are looking at the current political circuit, should they chase the yield curve right now at the moment with news that, of course, Nigeria may be looking at a higher interest rate maybe before the end of the year via the MPC?
Yeah, thank you, Bosun. Interesting about what happened yesterday. The DMO yesterday had to revise in terms of the calendar for the FGM bond market. So brought forward, rather than have the next auction about 2 weeks' time, brought it forward to last week. So for some investors trying to reposition, had to sell down on some of their existing bonds to reposition for new bonds that will be issued next week. So beyond the political scenes that we observed yesterday, beyond that, we discovered that it's maybe more of repositioning. We've been seeing that sell-offs, which was not peculiar only to Nigeria. It's across emerging markets that we've been seeing the sell-off on the back of rising yields in the U.S. market. Luckily, the Fed at the last meeting did not increase the rate, which is positive also for emerging and frontier markets. But in terms of riding the curve, the yield curve, we expect that what we are proposing or recommending to some of our investors is to take position in bills around the December, January levels, because we expect that as the government implements the budget, as you see in terms of election spending, CBN will be forced to also mop up, increase the rate of their OMO auction, and for them to be able to attract and capture that liquidity, they may be forced to also increase the rate around that period. So we expecting for investors to take position in bills within that December, January, such that upon maturity, they are in terms of investing, they will be able to invest at higher yields.
Okay, no, you talked about spending, of course, within the electioneering period. Will this in any way affect the shape of the yield curve?
Yes, like I just mentioned, that in terms of frequency of OMO auction, we've seen that CBN has maintained the OMO auction at 12% levels for the past 3 or 4 months. And for most of the auctions that have also been announced, we've not been seeing full subscription of some of those auctions. So for the CBN to be able to achieve its main objective in terms of controlling or managing liquidity in the system, may be forced to increase that rate slightly to attract more funds and also to reduce pressure on the FX, because that's one of the major focus of the CBN in terms of maintaining price stability. So we feel that in terms of the election spending, there will be more work for the CBN to mop up liquidity to control the pressure that may filter into FX.
All right, let's bring in Bosun at this point. Bosun.
Yes, Ayo, thank you, Chimeze. And I'm truly interested in, if we move on the conversation a little bit to the equity side of things, where do you see the equities markets go from here with the earnings that we have? And these earnings are beginning to show that the economy is not as strong as we all thought. You said the fundamentals are strong, yes, but we're beginning to see a bit of a weakening in some of these earnings, even with the big banks like Zenith Bank 2 days ago turning its numbers, and I'm sure you can relate to those numbers.
Yes, thanks for that. We've seen that for looking at based on sector basis, especially you look at the consumer goods, for most common denominator that have been affecting their performance, there has been smuggling. And when you come also to the banking space, you also discover that in terms of yield on investment, for Zenith Bank, we know they are very heavy on government securities. So it's not a surprise to see that moderation in their top line, that's their gross earnings, as a result of the reduction in interest income. So, but in terms of our outlook for the market, we expect market to still remain soft. The earnings season is wrapping up. Well, we still expect, I think, GT Bank, Access and UBA to release their audited account. But with what we've also seen in Zenith, the investors may not be too excited in terms of positioning ahead. But one interesting thing about the market is that the sell-off that we've been seeing also provide opportunity for new investors to come in at a very low level and to position, at least if you have like a year horizon, will also be able to you'll be able to recover or make significant or impressive gains when we are looking at the market in the next 1 year.
So how much of debt capital raise should investors, anticipate at this season of a tense political environment?
Okay. In terms of debt capital, we've been seeing short-term instrument, commercial paper. I think Sterling Bank will be announcing the result of its just concluded commercial paper offer today. We expect that for most of the corporates to take advantage of this low yield environment, to raise commercial paper as well as corporate bonds to restructure some of their very expensive loans. We know in terms of how high lending can be within the financial sector. But with the current rate, comparing to last year as high as 20%, at current levels, we feel that there's investors, the issuer or corporates can take advantage of this, and there's appetite from investors that they'll be willing to take up whatever has been issued, depending on the rating and the past antecedents of the company.
All right, I'm being told that Bosun has a question for you. Bosun.
Yeah, just a quick one. Yes, I was just talking about the corridor of the commercial papers, Ayo, with what the MPC last meeting talked about, opening the back door via the CRR for the regulator to buy back commercial papers for big ticket companies like Dangote Cement. So should investors and the market be worried that with the political environment, would there be the appetite for banks and the companies to float into the market at this very political season when the central bank will also be very aggressive in terms of treasury bills mop-up?
Yes. What most investors will be concerned about is how will the company repay. So in terms of the rating of the company, looking at the performance of this company will have a major role to play before investors will subscribe to the commercial paper offer. And looking at the from the perspective of the CBN in terms of buying from the issuer, we see that like in quote like a quantitative easing, but we've not seen enough in terms of the policy on how that will be done, or how in terms of how it will be structured. But what would expect that would see is that for companies that have very good rating, and in terms of looking at in terms of their performance in the past 2-3 years, and in terms of the volume compared to the amount of offer compared to the size of the company that they issue, we feel that for most companies that will come out around this time, that for the offers will be very successful. Appetite is very, very strong because some investors are also divesting from equities, and they are looking for investment with higher interest rates. Treasury bills, we know, currently around 11 to 12% levels. And investors, based on the yield for Sterling Bank that issued this week, yield was around 13.9%, which that's like about 2% premium. So investors will be seeking to take position in that. So a Sterling Bank issuing a size, I think maybe about 5 or 10 billion, can't recall the exact numbers now, compared to current level of assets. So you know that the risk is also minimized. Upon maturity, either the bank decides to roll over or either decides to pay investors. I don't think that will be a problem. But the main thing is the rating of the company as well as the past performances of that company.
All right, just a quick one, Ayodeji, before I let you go. Of course, today they're launching the new Securities Exchange Association. What's your outlook on that?
Yes, it's also interesting that most of the exchanges are coming together in terms of collaboration. It will help in terms of, it will reduce overlap. We've seen competition among some of those exchanges in terms of products. And if they are able to synergize, they will be able to come up with a more broader policy for the capital market, provide confidence, and also come up with more innovative products that will help deepen our capital market.
All right, thank you very much for your time, Ayodeji. And of course, thank you, my colleague out there, Bosun, for joining in this conversation. We'll take a break now, and when we come back, we will focus on the macroeconomic development. To stay with us.